Hello, everyone. Welcome to a Wall Street from Main Street podcast. My name is Mo Daoud, and today's special guest is Fabian Calvo, the founder of Fabian for Liberty and the Note House. Fabian, thank you for joining us again.
Hey Mo, thanks for having me on. It's always great. It's great to be with you.
Thank you. Thank you for coming back on. So I want to start off this podcast by discussing your background and where you came from and how you got into the libertarian movement, how you got into the real estate market, how you became an entrepreneur. So do you mind telling our listeners a little bit about yourself?
Yeah, no, I'd love to. Thanks for the opportunity. You know, I grew up in a middle class family, and I actually grew up in my dad's small business, which was interesting. You know, my dad person never really really never so much taught me entrepreneurship by teaching me so much, but showed me. He grew his business pretty big and was able to retire, in his early 50s, somewhat comfortable for him and my mom. And that was kind of always the model for me. Like, I looked at that and I said, okay, wow, if someone can come here at 9 years old, not speak the language, and be able to, achieve success, I wanted that. But, like many people, go through school, go through high school, go to college, we don't learn about economics. We don't learn about investing, about sound money, and so, unfortunately, I went from job to job. I was really stuck in the job paradigm in my early 20s, worked at several different places, slung pizza. I worked at Urban Outfitters for a couple days and kind of got fed up with that and walked off the job. And my last gig was at Xerox Corporation, which I was there for about 6 months, probably the longest job that I had in that couple year span. And Mo, I just realized working for someone else really sucks. I want to be my own boss. And I looked around and I saw, well, who out there is basically their own boss. And for me, at least, in my parents, friends, and people that I knew, most of them were real estate people. And so that piqued my interest, and I said to myself, okay, well, look, I'll go down this road. It looks like it's something where I could be my own boss, become self-reliant, and that's exactly what I did. I was in my early 20s, about 13, 14 years ago, and I dove full in to real estate investing. I started out with being a real estate agent out in Florida, and I actually started to sell a lot of really good real estate deals to investors. And, after my commission and my broker would take half, I was like, this kind of sucks too. I'm the one finding the real estate deals. Why don't I start buying them? And that's when I dove into the different principles on real estate investing, no money down investing, things of that nature, partnering with people, using other people's money. And within 3 to 4 years, I was making 7-figure plus income, had over 1,000 rental units along the Gulf Coast of Florida and Mississippi, had built a pretty big management firm, real estate management firm, and things were great. Unfortunately, although at that time I was keyed into current events and things of that nature, I wasn't necessarily didn't have the expertise I have today with financial markets. And luckily, I was able to see, look, this is becoming an unsustainable real estate market, and I was able to sell out of a lot of properties that we own, but not all of them. And so, like many, I had to deal with the struggles of the '08 housing crash. And that's really prior to that time is when I really started to learn about Ron Paul, learn about, his principles on economic liberty, on what real freedom meant. And I was a precinct captain for Ron Paul in his 2008 campaign. I started working for his campaign in 2007. And that is when I really started to understand the principles of sound money, of Austrian economics, how that really could make me a better investor, how that could make me a better business owner. And after the '08 crash, I really took all that information that I learned. I pretty much doubled down on my real estate experience. I founded the Note House, and it's had tremendous success, meeting all kinds of incredible people on Wall Street and financial markets. And that's basically my story in a nutshell, man.
So you were discussing when you realized there's a housing bubble going on with up to 2005, up to 2008. Was there a single moment or event that made you realize that there's a big housing bubble going on in this economy, and I better sell out soon,
Yeah,
or it's
that's a
going to be
great
big?
question.
Yeah.
We were actually at that point. I was raising investor money, and I found a niche, and this is what I often talk to people, my podcast or just in the work that I do, that whether or not real estate's for you or whatever it may be, find your own niche. And my niche at the time was finding nice apartment buildings in nice locations in Florida, converting them to condominiums and selling the condominiums. And I'll never forget, Mo, there was a gentleman who was a plumbing contractor. He was probably making $75,000 a year. I mean, it wasn't a big business, and obviously nothing wrong with that occupation. I think we need more people that understand, trade jobs, because they're good paying, and there's not a lot of people getting educated on them. But nonetheless, I remember him bragging about the fact that he had purchased with almost no money, going down, getting these interest deferred loans and these ninja loans and what have you. And he owned over 16 condominiums. And I said to myself, what happens if this guy loses his job and he just loses 3 or 4 tenants? How is he going to be able to maintain this? And sure enough, he ended up losing everything. But that's what really started to wake me up, seeing just the unsustainability of the market, seeing the fact that they were basically giving out money to anyone. I mean, I'd look at properties that were being flipped over and over again with the span of a year, and price swings of $50,000, $100,000, $200,000, and it just became abundantly clear that it was an unsustainable trajectory that ultimately would implode. So that I say was probably the first kind of indicator that I got that this was an unsustainable bubble that was getting ready to blow.
And unfortunately, a lot of people like the plumber that got into real estate back then had many properties, and unfortunately they didn't realize that there was a housing bubble, and they didn't sell out, thinking that the housing market will always go up because there's always a demand for housing. True, but not everybody could afford a house back then.
Yeah, and also the propaganda too from the Bush administration on home ownership, the propaganda from the media, and people thinking that, wow, I'm a millionaire on paper. I have all these assets, but it was all just that. It was a phony illusion, and obviously created by inflation caused by the Fed and the central banks that were feeding these big banks money to lend out like candy. And it's interesting that propaganda of home ownership, it's easy, it's cheaper to own a home than it is to rent. Really, it suckered a lot of people in, and it's kind of the equivalent of what I see today of the stock market, where people, again, are believing that we are having this great recovery based on this housing market. I think less people believe it today than they did back then, but there's no question they've tried to reinflate asset prices to sucker back in the middle class and people that still have money to invest in their Ponzi scheme.
And it's unfortunate that they've gone back to the old ways and tried to revamp the housing market and try to get people to go and buy more house and get into the real estate market when the economy has other big problems that need to be taken care of, and they're not focusing on that. They're major focus on getting the housing market propped up again. So it's an interesting background that you have, and I always enjoyed hearing entrepreneurs and their stories and how they became more successful, and I respect them because they took the risk. They came out of their comfort zone, their own business, and worked their way up, which is, the best way to go. And for all the people I ever met in my life, I think the entrepreneurs are the most happiest people I met in terms of their employment. All the other people I met that don't like their job are the people that work for someone else. So people are interested in becoming entrepreneurs. That's a great way to go.
Yeah, no, that's a great point, and that's what I think is still the. I'm big into the real estate market, and I've adapted with the manipulation and the bubbles that are created by having very short time horizons. I don't buy and hold. I don't teach others that come to my live events that type of strategy of fixing and flipping, because I think it's one that's proven that you can make some money doing it, but you're open to the volatility of the market. And I have to say that entrepreneurs that may try the first time. I tried several times. I failed, but it's really building upon those failures, continuing to try, and really wanting and understanding that the maximum freedom, I think, for individuals are those that can have real financial independence and be out of the job paradigm. That doesn't mean every job is bad. I mean, there's people out there listening that might have a good job that, work for a growing company and do see opportunity. But by and large, with NAFTA, CAFTA, and all these other free trade agreements that in essence have turned America into a service economy, most of those jobs are dead-end jobs. And anyone, look, if I can do it, and I was completely clueless, I was a college dropout, if anyone can do it, if I can do it, anyone, I really believe, can do it as well. But they really need to have a clear path of what they want, set good goals that they can measure and that they can move forward on. And, if anyone, Mo, has that in them to do it, I think it's people like your audience that are already wanting, to break free of the propaganda machine that they're constantly hearing about.
I agree there. And, if you could do it, there's other entrepreneurs that dropped out of college and were able to do it, like Zuckerberg, Bill Gates, and Michael Dell, and other great entrepreneurs in this country. If they could do it, so anybody else.
Yeah,
so,
on that point real quick, I'll just say, over the weekend we heard about, Dr. Dre selling his Dr. Dre Beats for $3.2 billion, or, he's a guy that literally came from the ghetto, was a gangster. I mean, that's the type of American success story that people should hear more about, and kids should be taught about that at school. And we're not, that's something, like I said earlier, is not taught at school, but that's what I think is the type of opportunity that we still have today in America. Now, no question, New World Order, the authoritarians, the central bankers, in my opinion, are trying to change that, but that window is still open, and that opportunity is still open for anybody that's really hungry and wants to take it.
And that window will never close, no matter how big the government gets and what the elite and the government try to do.
Yeah, I would agree with that.
So let's just get here and talk about the real estate market. Lately, Congress is looking to dismantle Fannie and Freddie Mac. Excuse me. What implications do you think that would have on the real estate market?
Yeah, I mean, I've heard this a lot. I don't think it'll happen because if it did, it would collapse housing prices. I mean, you have these institutions that buy up most of the mortgages between FHA, Freddie, Fannie, that buy up 80 to 90% of mortgages that are originated from banks. If those were dismantled and they didn't have more of a government assistance like they do now, I mean, these are quasi-government institutions, or really government institutions in my opinion, it would collapse housing prices because there wouldn't be that demand for those loans, so banks would scrutinize much more. Here's a perfect example of why I think that will not happen, is the subprime loan market heating up again. Now, this is something that I've been talking about now for over 2 years, saying subprime loans were going to come back. And I remember when I was talking about it, people said, you're crazy. We've learned from those mistakes, but we haven't. I mean, Wells Fargo, FHA, Colony Capital, Skyline, and so many other lenders out there that are big lenders, Wells Fargo obviously being one of the biggest, are reducing credit standards. Almost, it seems like every quarter the standards are changed, benefiting more subprime borrowers. And what I like to relate it to, Mo, is the car industry. I mean, 80 to 90% of all GM cars that have been sold since the bailout have been to subprime borrowers. That's the only reason GM is making any money, or on paper looks like they're profitable. So we have all these different central bankers, particularly the last three Fed chairs, that have made it crystal clear that to have economic recoveries, to have a strong economy, they need to have a strong real estate market. And I think right now what we're seeing is a lot of these subprime loans are going to start to come back, but we're also seeing a rush to hard assets globally. It's why just last week it was reported that the first quarter cash transactions for real estate were at a record level. And I think we're going to continue to see that over the next couple of years. I think we're going to see the real estate market explode towards the upside, as well as the stock market. All manipulation, all opportunity for investors. They just need to know what's going on ahead of what I think will be an even more spectacular downside in asset prices.
And all this cash inflow into the real estate market is, a lot of it's coming from overseas, like China mostly. A lot of them are coming into the United States. They just overtook Russia in New York City as the number one real estate buyer in that city. And we're also seeing them on the West Coast as well. Why do you think the Chinese are investing in real estate in this country?
Well, definitely the Chinese are the ones that are reported about mostly. But I'll tell you, Mo, someone who, my company is in about 30 different markets, has the pulse, my hand on the pulse of the market pretty well. There's Australians, Europeans, a lot of money coming from London, a lot of money coming from the Middle East, a lot of money coming from Russia that's buying real estate in America. The Chinese get the most press because of a lot of big moves they've been making in places like Detroit, Toledo, Ohio, plus a lot of other types of real estate that people don't understand. In case of China, buying Smithfield, which overnight became the number one employer in a lot of different cities across the country that basically deal with hog production. Smithfield being, like I said, the number one hog producer. So vast amounts of farmland, all kinds of stuff that they're now owners of. I think that the world, interestingly enough, still views America as a safe haven for investments. I have a few business partners in China that certainly view it as that case. They recognize that there's a lot of instability, but they look at the world and they still think, look, we could buy up a lot of these homes in the U.S. for still pennies on the dollar, although they're starting to go up in price. And, they're willing to allocate 10%, 15% of their portfolio into real estate for a variety of reasons. I think on one side you have people that recognize it as a hard asset and they want to own it. There's also implications for a lot of them that want to get visas and want to be able to travel here freely. And then on the other side, I think you have a lot of this money that is in collusion with central banks, recognizing that they could buy extremely cheap, and as the run-up in prices continue to go up, particularly when they get up the no money down loans and really make the market fuel, that they could sell out in what I've compared to a big pump and dump scheme.
And that's a great point. And another question I want to ask you about the real estate is, a lot of people in Washington, D.C. think that we need a strong housing market in order for the U.S. economy to function. Do you believe that, or do you think the housing market is a component in the economy and it requires equal attention compared to other things that's going on in the economy that's not doing so well, like employment and other areas as well?
Well,
what do you think?
Well, I think that, it's definitely a major, in the service-based economy we have today, it's a major aspect. I mean, from the title companies to the mortgage application, to all of the different industries, Home Depot and the paint stores and all these other things that are an extension of the housing market. Real strong economies are built on people that build something, produce something, sell that, save money in order to reinvest and build something new. We don't have that today. Most people in America are in debt. Savings rates are next to nothing. So, fueling another speculative bubble isn't real economic growth. I mean, I've argued now for four or 5 years that I don't believe we've had real economic growth in America at all. I think it's just been inflation driven, and that's why you see any positive GDP. But really, if you were to factor in the inflation, we'd likely have negative GDP, and that's seen in all the manufacturing jobs that have been shipped overseas, the transition from a manufacturing-based economy to a service-based economy. So, on one side, you can make the argument, yes, if there's a big boom in the real estate market, will a lot of people benefit from that and somehow their industry is linked to the housing market? Yes, they would. But the question is that a real sustainable model, Mo, for real economic growth, for a real sound economy built on production and savings? I don't think it is at all.
And it's hard to save in this country when inflation is so high, especially when it comes to food, energy, and other things that necessary in our everyday life. And then also, there's pretty much no jobs in this country. Not enough jobs in this country for everyone. So that makes it harder for people to want to go buy houses when inflation is high and there's no jobs. And then also, if you look at the economy as a whole, the global economy, other countries are having the same problem. In South America, in Europe, and even China and India, inflation there is so much higher compared to the U.S. because when the Fed print money, the inflation is exported into those countries because they're like China, they're pegged to the dollar.
Well, Well, that's a great point, Mo, and that's why the world's getting away from the dollar, and that's why I think the BRIC nations, particularly the Russians, the Chinese, the Indians, are looking at, are basically, in my opinion, based on what I've seen, based on my contacts, are currently working on a new type of global financial model. And look at the IMF, look at all, the Chinese finance ministers, the World Bank former chief economist. All of these people are on record saying we need to get away from the dollar as the world reserve currency. So I think that that inflation that's being exported, in the case of China, up over 200% in the last 10 years, inflation is completely unsustainable for the long-term growth of those countries. So they recognize they got to get away from the U.S. dollar. Now, I want to just touch on the comment about the jobs picture, because this is why, Mo, I've made it such a big point in my commentary and the work that I do in trying to get people to open up their eyes to entrepreneurship. Because the jobs that have been lost since 2008, those jobs are not coming back. I mean, it is a fundamental transformation of the U.S. economy. Technology's taken out a lot of these jobs. Technology will continue to take out a lot of these jobs. Look at, for example, the record industry, how that's been completely changed. We're now seeing the world of media completely changing. And really the door, in my opinion, is open like never before for entrepreneurs. And hopefully those people that are out there that lost a job in an industry, the sooner they realize those jobs are likely never coming back in light of the politicians making promises that they will, the sooner that they understand, hey, why don't I focus on being a job maker instead of a job taker, I think the faster that we can start to have some real economic growth in this country that's fueled off of a renaissance of entrepreneurship.
I agree with you there. Those jobs are not going to come back. Thanks to the government, high taxation, inflation, and a lot of regulation, especially Obamacare. And with the GDP growth, it was at 0.1% in the first quarter. If it wasn't for Obamacare, I read it that somewhere that if Obamacare didn't exist, the GDP growth would have been negative. Let's tell you how bad it is in the U.S. So if let's focus on the U.S. economy for a second. We're in a period of uncertainty with the Fed reducing the QE program, Obamacare, conflict in Russia, Ukraine, etc. You think the market has reached a tipping point?
Well, I think that a lot of the Fed taper has been propaganda because of the backlash that many people were starting to basically come out and say, look, this money printing is getting dangerous and needs to stop. Some even within the Fed and some of the Fed branches around the country. I think that we've seen, unemployment figures absolutely horrendous the first quarter of 24. We've seen GDP growth completely come to a screeching halt, likely will be revised to negative growth in a few months. That'll be on page 18 of the front page, so nobody will ever hear about it. But we continue to see, Mo, rates, although they've gone up, interest rates, although they've gone up somewhat, they still remain relatively low. We've seen the stock market continue to rise in prices. Real estate prices continue to rise. So to me, that's all systematic of the Fed still creating excess cheap money. And just last week, we had Yellen, basically testifying before Congress and in the recent Fed Minute meeting saying that, look, it's very probable they might have to stimulate again. Now, that's really telling because when economic stimulus, i.e. money printing, is the last resort for hoping your economy is going to grow, you're in real trouble. And I think that should be the leading indicator of any investor recognizing that that is symbolic of an end-of-the-road cycle for a country whose economy has been completely obliterated by currency debasement. And to me, it's like I said, the biggest indicator for me as an investor to look at. All the other ones are really secondary because of, we know the job losses are going to continue, like I said, for obvious reasons of technology, a lot of these jobs being shipped overseas. And I think we're at a point where the only remaining tool to keep the Ponzi scheme afloat, to keep the illusion of any recovery afloat, is for the Fed to continue to print more and more money.
And I agree. I think the Fed's going to have to come out sometime this year and start to increase their QE program, maybe even more than what they had before at $85 billion per month, supposedly. But I heard that the QE program was around actually $100 billion. So who knows how much they're printing.
Estimates that I had from really, really good sources were at the height of QE was well over $125 billion. And a lot of this wasn't just to stimulate the economy, Mo. A lot of it was to bail out European banks that still were not recapitalized, bail them out so that they would keep the Ponzi scheme of the U.S. dollar afloat. I mean, European banks hold 60% of their reserves, roughly, a little bit more, give or take, on the country in U.S. dollars. And, the same banks now, though, are beginning to, in Germany, in Switzerland, in London, are beginning to come out with, Chinese bonds. And it's no secret that the Chinese are seeking and are moving at lightning pace to internationalize their currency. And the U.S.'s response is, hey, European banks, we got a slush fund of trillions that we can give you, or hundreds of billions that we can give you. Stick with us. And I think that's kind of the epic financial battle that's being waged right now.
Yeah, and I agree. And the QE program, it's only just to bail out the banks, and it does nothing to the middle class or the lower class in America, only just create more inflation and harder for them to get by. So before I let you go, I want to talk about your book that you recently wrote, the Great Economic Reset. Could you tell us more? Could you tell our audience about that book and how they can get it?
Yeah, certainly. So the Global Economic Reset is basically really something that I started talking about a few years back. I always say it's not my theory because it's happened 6 other times in the last 600 years. It's also happened in ancient history as well with the Romans, the Byzantine Empire, Babylon, you name it. And it basically has to deal with the U.S. losing its world reserve currency status. Now, the last time this happened was in 1945 after England lost World War, or after England basically, Bretton Woods lost the world reserve currency. And we went in and did a lot of history, did a lot of research of history. We found that all of these modern examples of currency resets had to deal with 4 characteristics that are ingrained today in U.S. political system, the economics, and in society. And they have to deal with way too much war, way too much reckless debt, too much political corruption, and too much elite decadence. And America has all of those hallmarks today. Now, another important point here is that America in 1870 surpassed England as the largest economy in the world. But it took about another 75 years for them to finally get the world reserve currency. Well, the World Bank, many of your listeners may likely know that a few weeks ago released a report where the Chinese economy will be larger than the U.S. economy by the end of the year. Well, we live in a world, I think many would agree, Mo, that we live in a world where things happen much more rapidly today. And when I, again, hear the IMF, hear the former World Bank chief economist, hear the Russians, the Chinese, all of them talking about a new global world reserve currency is needed, I take them on their word. I believe what they say. I believe they're working on it. And I believe it's only a matter of time before this event takes place. I don't have a timeline for the event. Many people back in 2008 said that they thought that the dollar was finished back then. You ask people like Jim Rogers and many others, they'll tell you they're surprised they can keep it up this long. But I have no doubt this event will happen. And for those that are unprepared, and I don't just mean food storage, guns, and gold, I mean just having a sound plan financially for yourself, for your loved ones, it's going to be a real difficult road. And in the case of the dollar losing its world reserve currency status, I think overnight all that inflation that we've exported around the world will come home to roost in America. And that can mean the doubling, tripling, quadrupling in food and in gas and in the standard of living in this country.
And your new book is called The Global Economic Reset. I got the title wrong a couple minutes ago. I apologize for that. And if people want to buy that book, where can they go?
Yeah, it's going to be available on Amazon. They can pre-order it now at GER2015.com. That's GER, Global Economic Reset, 2015.com. And, I try to make it something, Mo, that's entertaining, that is easy to read, and that really just breaks down. And hopefully, like I say all the time, people don't take my word for it. I hope it's a catalyst for readers to go and basically do their own research on what I'm talking about and come to their own conclusion. Because, again, like I've said before, it's better to prepare a few years early than be prepared a few days too late.
Absolutely, and I've just finished reading that book a couple of days ago, and a great read. I highly recommend it to anybody out there So, Fabian, thank you for coming for a Wall Street from A to podcast, and hopefully you can come back on again.
So, like I said, it's always a pleasure, Mo. Keep up the great work. I routinely listen to the interviews and the people you have on, and I think we definitely need more individuals like yourself that are promoting the message of sound economics and entrepreneurship. I think it's needed more today than ever before. So I appreciate you having me on.
Thank you. I appreciate those kind words.